to see goods and services. Goods and services are the output of an economic system. Goods are tangible, they are visible, and they are sold to the consumers, while the services are tasks performed for the benefit of the recipients. They are intangible, they are invisible. So examples of goods are automobiles, then machines, clothing. Examples of services are the services of a doctor, teacher, consulting services, legal advice, house cleaning, etc. There are consumer goods and producer goods. Consumer goods are final goods, and they are classified into non-durable goods, semi-durable goods, and durable goods. Services, they are also coming in this category. That is, the consumer goods, they are classified into non-durable, semi-durable, and durable goods and services. So what are producer goods? They are capital goods and intermediate goods. In the producer goods classification, that is, it is classified into capital goods and intermediate goods, in that capital goods are final goods. Intermediate goods, as the name indicates, is intermediate. Intermediate goods are used for further processing and resale in the same accounting year. Example for intermediate goods: raw materials purchased by a firm. The same good may be final or intermediate good. It depends on the end use of the good. Example, sugar used as a raw material in the bakery for making sweets is an intermediate good. But if it is used by a household in milk or tea, is a final good. Now we are going to see in detail what is meant by final goods and what is meant by intermediate good with examples. Final goods are those goods which have crossed the boundary line of production and are ready for use by their final users. Who are the final users? They are the consumers and producers. Accordingly, final goods are often classified as final consumer goods and final producer goods. Final consumer goods are finally purchased by the consumers for the satisfaction of their wants. Final producer goods are finally purchased by the producers and are generally used as fixed assets in the process of production. And these final goods are ready for use by the final users. They are used for personal consumption by the households, which are called consumer goods, or investment by the firms, which are called capital goods. And these goods, they do not require further processing. That is why we say that they have crossed the boundary line of production. They are ready for use. They give direct satisfaction to the consumer. These goods are not resold by the firms for profit during the accounting year. Expenditure on these goods is called final expenditure, and these goods are included in the estimation of national income. So, what do we mean when we say that final goods have crossed the boundary line of production? We mean that these goods are out of the process of production or the process of value addition. It can be used directly by the consumers. So what are intermediate goods? They are those goods which have yet not crossed the boundary line of production. Value is still to be added to these goods and which are yet not ready for use by their final users. In other words, intermediate goods are those goods which are purchased by one firm from the other firm as raw material or as goods for resale. They are used for further processing and resale in the same year. And these goods may be used as raw materials for the production of other goods during the accounting year. And these goods may be resold by the firms for profit during the accounting year. Expenditure on these goods is called intermediate consumption or intermediate cost. these goods are not included in the estimation of national income. The same good may be final or intermediate good. It depends on the end use of the good. As I have mentioned earlier, sugar used as a raw material in the bakery for making sweet is an intermediate good. But if it is used by a household to make milk or tea, is a final good. So it depends on the end use of the good. Next, we are going to see consumption goods and capital goods. Consumption goods are those final goods which satisfy the wants of the consumers directly. Example, food, car, television, furniture, etc. Consumption goods are classified into durable goods, semi-durable goods, non-durable goods, and non-material goods, which is called services. And now you know what is the meaning of final goods. So, next we will see the classification of consumption goods, which is already given in the introduction. That is, consumption goods are classified into durable final goods, semi-durable final goods, non-durable final goods, and the services, which is also a final good. So, what is meant by durable consumption goods? They are those goods which can be used for several years and are of relatively high value. Example, TV, radio, car, scooter, washing machine, etc. Semi-durable consumption goods that can be used for a very short period of 1 or 2 years. They are not of very high value. They are electric goods, clothes. They are of value. They are durable, but they are semi-durable. The durable goods can be used for a long time, but semi-durable goods can be used only for 1 or 2 years. Now, so what are non-durable goods, which is otherwise called single-use consumption goods? They are those goods which are used up in a single act of consumption. Example, food, LPG, milk, petrol, etc. And services, we have already mentioned, they directly satisfy human wants. Example, service of a teacher, lawyer, doctor, and housekeeper, etc. Next is capital goods. They are the final goods which are used in the production of other goods and services. They are the final durable goods, machine, equipments, and the same good can be consumption good and also capital good. How can a good be consumption good or capital good? It depends on the economic nature of its use. Example, a grinder purchased by a household is a consumption good. But if it is purchased by a firm, for example, a catering center, it becomes a capital good. So it depends on the economic nature of its use. And expenditure on final consumer goods by the household is called consumption expenditure. And expenditure on final producer goods by the producer is called investment expenditure. So, the income of the two sectors or the expenditure of the two sectors is C plus I, consumption expenditure plus investment expenditure. Now, all fixed assets are not capital goods. We say that capital goods are the fixed assets. They are the final goods. But all fixed assets are not capital goods. The same good can be consumption good and also capital good. As I have mentioned, it depends on the economic nature of its use. Then all capital goods, they are final goods and they are producer goods. But all producer goods are not capital goods. Because producer goods include capital goods and intermediate goods. The machine used to produce a good is a capital good, but the raw materials used to produce that good are intermediate goods. So everything depends on the nature of the use. In the next module, we will see what is the difference between factor income and transfer income, then the concepts of normal residence and economic territory. Thank you.